Yeah, Patrick. So today, what we're going to do is we're going to talk about Apple. Apple reported earnings this past week, late this week. They were blowout numbers. We're going to go into the Apple's earnings call. And a lot of people don't take the opportunity to listen to the earnings call. So I really want to encourage our viewers to listen to the earnings call. So if I actually play some of the excerpts from it, maybe people will get a sense of the value of the earnings call. So, Patrick, let's do the intro and then we'll start the show and go right into it, okay?
Sure, no problem.
So, Patrick, my first question to you would be, did you have an opportunity to hear the earnings call?
No, unfortunately, I missed it. I had prior arrangements.
Yeah, and you know what? That's not unusual, right?
Hmm.
Oftentimes we're very, very busy and we don't have the opportunity to listen to the calls. So that's exactly why we're having the show we're having today. I, I I'm not sure what percentage of the people take the opportunity to actually listen to the earnings calls of some of the most popular stocks that we talk about. But today, hopefully, you will get some value from what we're about to present today. Now, Patrick, answer this questions. When executives talk about their companies on an earnings call, if they tell stories, lie, or whatever, can they get in trouble?
If they make up stories about their earnings and products, and yeah, yes, they can because they would face SEC sanctions.
Exactly. And, newer investors may not realize that these quarterly calls, once every 3 months, those executives, the CEO, CFO as well, they have to get on and report the future projections of a company. And if they lie, they can get in a huge amount of trouble. They can go to jail, big fines, and all of that. So when executives talk on an earnings call, they pick their words very wisely, but they
Yes,
also realize that they can get in a lot of trouble. So they try to speak as factual as possible. So
yes.
let me play some excerpts from the most recent earnings call with Apple this week. They reported blowout numbers, as we talked about earlier. I want our audience to hear what Tim Cook had to say about Mac sales, how Apple is penetrating across the world. Check this out, Patrick. I think I'm going to get this clip to play this time. Okay?
Oh, okay.
All right.
Very much. Tim, could you talk a bit about the Mac business? Looking back, it's up about 50% from the calendar 2019 revenue. You did almost 11 billion this quarter, and you're still working through the M1 transition. So, can you talk about where you see the opportunity to gain share? What are really sort of the target markets that you think you can go after, in order to grow this, beyond, I think it was about 37 billion in the last 12 months. Thank you. And then I have a follow-up.
Yeah, Shannon, thank you for the question. Max set an all-time revenue record at 10.9 billion for the quarter. That was up 25%. And as you point out, the last 6 quarters for the Mac have been the top 6 revenue quarters of all time. And what's further very good about this is we set all-time revenue records in Americas, in Europe, and the rest of Asia Pacific, and we set a December quarter record in Greater China. And so it's not narrowed to a particular geographic area that we're doing well in. It's almost across the board. The response is very much because of M1. And we got even more response with the MacBook Pro that we launched during the Q1 timeframe. Both the upgraders, which we had a record number of upgraders for the December quarter, but also in markets like China, 6 out of 10 sales are to people new to the Mac. And so it's powered by both upgraders and switchers. Customer satisfaction is off the charts. And so what I see this as is a product that will be very successful in a number of different markets, from education to business to the creative industry, and in all geographic markets. We're not limiting ourselves.
Patrick, what did you hear there, my friend?
Well, I heard that the iMac, and the MacBook computers that Apple sells, that's what they were first known as, and they've evolved into the latest iterations. Is that it's becoming increasingly prolific, and it's just like the growth is just off the chains in terms of those two products. The notebook, the portable computer, and the desktop, the iMac. And what's more is that the M1 is Apple's own processor. So in that respect, I think the M1 processor that Apple has further developed, that's going to allow Apple to control the inputs, not only so increase profit margins in that respect, but the satisfaction is good. I mean, it's a superior product as compared to many others.
Did you hear that adoption rate for the Mac, and all of the new users that Apple is penetrating, the way they're penetrating China? And it's not just penetration in one particular segment, but it is a global growth penetration. So why would that be important, Patrick? Is when you look at the market cap of Apple, right around what, 3 trillion? Some
Yeah,
would
just under
say,
trillion.
yeah, some would say, well, is it going to continue to grow, right? And I would say not only is it going to grow, it's going to more than double, I think. But we'll go through some metrics in a moment. But I wanted you to see that. Listen to this. I want you to hear this next clip on the services side of the business from the conference call. Check this out.
Thank you. And then, Luca, can you talk a bit more on services? Just, obviously outperformed your guidance or your expectations, as well as certainly where we were at. Where were what were the things that really outperformed, and maybe what trends are you seeing that is, driving the extra revenue? Thank you.
Yes, Shannon. It was really great on all fronts. We set December quarter records in every geographic segment. And then, as I mentioned earlier, an all-time record for cloud, for music, for video, for advertising, for payment services, December quarter record in the App Store. So we've done, as you said, better than we were expecting at the beginning of the quarter. This overperformance has been, spread around the world and spread around our services categories. And the reality is, this combination of factors, the fact that the install base is growing, the fact that we continue to have more and more engagement of our customers on all the services. Paid subscriptions is a phenomenal story, right? We now have 785 million paid subs. We've increased 165 million in the last 12 months alone, right? And so all these things combined are really powering the business. Very, very pleased with the performance.
So that was another small clip from the conference call, Patrick. And that's Luca. He's the CFO, the Chief Financial Officer for Apple, just on the call describing the services growth. And so I'm going to play a little more from Luca in a moment. And these are small clips, like 1 minute clips from the conference call. But I just want our audience to see the importance of the information on the conference calls. It's invaluable information that you do not get reading. You get a chance to hear these analysts ask specific questions to them, very tough, specific questions about the growth of the company. And it gives you a really good sense of, do I understand the growth thesis and should I invest? In Apple, as we believe, Patrick, it's a big growth story. I don't know if you want to comment on that. I have another like 1 minute clip from the conference call that I want to play for our audience with Tim Cook talking about Apple's positioning in the metaverse. Are you interested in hearing that?
Oh, absolutely.
Yeah, and so again, these guys are coy. These guys can get sued. These guys can get in a lot of trouble if they say, non-factual things. But listen to Apple's positioning in the metaverse. And a lot of people do not talk about Apple in the metaverse. So I want to play this.
That it makes a fundamental change in the supply chain.
Okay, thank you. And how are you thinking about the metaverse opportunity and Apple's role in that market?
Well, that's a big question, but we're a company in the business of innovation, so we're always exploring new and emerging technologies. And you've spoken at length about how this area is very interesting to us. Right now, we have over 14,000 ARKit apps in the App Store, which provide incredible AR experiences for millions of people today. So we see a lot of potential in this space and are investing accordingly.
Did you hear that, Patrick?
Yes. So
Did you hear how many AR kits in the metaverse alone they have?
Yeah, like 14,000 or so.
14 freaking thousand.
That's crazy.
So Apple is going to be a part of the metaverse story. Now, this next short clip, Tim Cook is going to talk about the biggest opportunity. An analyst on the call is going to ask Tim, okay, so what is the biggest opportunities for Apple you see coming forth? Now, Patrick, I know you haven't listened to the call yet, so you said that. What do you think Apple's biggest opportunities are? You're going to be surprised with what Tim Cook says, but what do you think Tim Cook said?
Okay, well, to me, the biggest opportunities would be the service and the metaverse that's just explained, because those seem to be the growth areas of Apple.
Okay, all right. Well, Super P, you're pretty smart, but let's see what he said, okay?
Okay.
Where we are competitively and strategic position of the product.
And if I can just follow up, and similarly on Apple Pay, can you just help us think about, when you think about the next few years, where are the biggest opportunities, either be it in terms of like geographies or either segments, customer segments that you may not be tapping into currently and have an opportunity in? Thank you.
Well, putting aside any kind of thing that's on our roadmap for a second in that area, which we obviously wouldn't talk about in the call, I would say that I think Apple Card has a great runway ahead of us. It was rated the #1 mid-size credit card in customer sat by J.D. Power, and is getting has fast become people's main credit card for many people. And the growth of Apple Pay has just been stunning. It's been absolutely stunning. And there's still obviously a lot more of there to go, and because there's still a lot of cash in the environment. And so I think that both of these and whatever else we might do have a great future ahead.
Congrats on the result.
So, Patrick, did you expect him to say that?
No, not at all.
And that's the point. That's the point. Those are the kind of things you would not get unless you listen to the conference call. Those are the kind of things that when you read like CNBC or look at the USA Today or just all of these publications, they write what they write, but those little small nuggets and insight is what you get from the earnings call. Now, we did an earlier show, Patrick, maybe about 4 months ago. I don't
Yeah.
want to say about how do you find an earnings call. It's pretty simple, and we have a show on it, and maybe I will link that to this show after we finish this broadcast. But what are your thoughts on that, Patrick, with what Tim Cook had to say?
Yeah, I mean, it seems as if Apple is just expanding in many different areas. So the card, the Apple Card, and health services and other services that are away from the iPhone, the iMac, and the MacBook Pro. So that's why they've called it Apple Inc. versus Apple Computer.
Right. And the services is big and the credit card is huge. Apple Pay is huge and it's a growing service. Now, here's the last clip I will play from the conference call. It's a short clip. Luca,
Yes.
the CFO, he's going to talk about services and the engagement with Apple. And Apple whole strategy is to get you hooked into their ecosystem. And then
Yes.
once they get you hooked in their ecosystem, they will just continue to just bring value. And then they'll get you hooked to pay for like the cloud services and other things. So I want you to hear what the CFO had to say about services. And the analyst asked this question, so I thought it was pretty good. Let's check it out.
Okay.
The way that I look at it is that there's a lot more greenfield in front of us.
And Ben, on the services engagement and how we think about customers, right? Obviously, it's important for us that customers are engaged on our services platforms. And the ones that we have, we know that the more engaged they are, they're more likely to stay with Apple for the long term. So we just obviously track all those metrics, and they're very important for us. And that's why we continue to improve the quality of our offerings and the quantity over time. As you've seen, we've launched a lot of new services. We obviously care a lot about new customers as well. And that's why we keep track of the installed base and a lot of other metrics on that front. It's very similar to what we do with products. I mean, also for products, we care a lot about upgraders. We care a lot about switchers. It's obviously the combination of the two that, when you put it together, provides the level of growth that you've actually seen in our services business. I mean, the last 12 months, we've done over $72 billion of revenue on services. It's the size of a Fortune 50 company. It couldn't happen without contribution from both existing and new customers.
How many billion?
72 billion in services.
72 billion in services alone.
Yes.
Do,
I mean,
do
the
you know what
service-
the market cap of like GM is? Meaning how much GM is worth in market capitalization?
Certainly not 72 billion.
About 70 billion. Just the Apple services alone. And that is the small potatoes for them. It's $72 billion. But I cut you off, Patrick. Go ahead.
No, it's okay. No, I mean that's these are stunning projections and stunning results. It almost seems as if that could be like a standalone company, and if it were a standalone company, that would be a Fortune 500 company. The Apple services.
And so once again, that's kind of the information you get on the calls. And so just look at our video, how do you find a conference call in a stocks conference call to listen to them. And all earnings calls are 1 hour. So they specifically keep it to 1 hour just to save time. And some go over to like an hour and 10, hour and 15 minutes, but 1 hour is the standard. So I'm just recommending everybody that follow us and really listen to the earnings call for the companies that you're going to invest in. Now, Patrick, they said all of those wonderful things, right? But is Apple really as good as they say? So let's look at the actual results of Apple's reporting from last week. Can you share your screen and just show some of the spectacular results that Apple reported last week to go along with this conference call?
Yeah, so I'm just going to go to the tab right there. And yes, and here they are.
So, so what we're looking at here, Patrick, is what the analysts that were on the call were expecting and what Apple actually did. So can you step us through like the big highlights? I think the audience can just look at everything. We should not read everything. But what were some of the bigger numbers here?
Okay, well, so, first of all, the revenue, we'll start with that. So the revenue reported was approximately 124 billion versus 118.5 billion. So that's up 11% year over year. So that's very impressive.
And the largest ever.
Yes, the largest ever. And we're looking at an earnings per share of $2.10 per share versus $1.89 estimated. So that's up 25%. 25 year over year. And the gross margin, which is also important. So that essentially, that's 43.8% versus 41.7% estimated. Also a very good number. This number here, this gross margin, indicates that Apple has good pricing power for its goods and services. So the gross margin is huge. And this is one of the reasons why Apple has such a big cash reserve of about, in the hundreds of billions of dollars.
Yeah, so if you look so that we don't have to read everything and just for the sake of the audience time, Apple beat on all of the numbers. They had record results on all of the numbers,
Yes.
except the iPad. The iPad, if you look closely at those numbers, they miss estimates, and there was supply shortages for some of the components. But if they didn't have those component shortages, they would have beat that. So just record blowout numbers, the most Macs ever, and they continue to grow. And so let's look at the next thing, Patrick. So we just went here. Let's look at our staple. You know what it is. We love the charts, and we're more fundamentalists. But let's look at the 5-year chart in the exponential 200-day moving average, just to see what Apple looks like, because I want our audience to invest in Apple versus storing their money in a bank. No storing your money in a bank. Just buy Apple and just let it go there. It will grow.
Okay, so I'll share the bar chart right here.
Okay, let's do that.
So just let you know that this is a 5-year chart.
And what frequency? We're on a weekly frequency.
We're on a weekly frequency, yes, right here. And so as you saw, AAPL is the ticker symbol. And this is a 5-year chart going back to March 2017. And as you can see, with the exception of the pandemic lockdown, which is of course an anomaly.
Can we see the bottom? Yeah, there we go.
Yeah,
Thank you.
so right here, so this is, like an anomaly right here. And right here, this is where the whole market kind of came down because of interest rate fears. But the overall trend is up according to the 200 period
Exponential 200-day moving average.
right. And Apple has always held above it.
So that's the key I wanted to point out. So we always look at a 5-year period weekly to ensure that a company stays mostly above the exponential 200-day moving average. That's your proof that you can mostly safely invest in this company and get a return on value. We did a
Yes.
store of value fiat currency a few weeks ago. This is like your store of value here. It consistently stays above. And that being the stock price. Now let's look at a 10-year monthly, Patrick, just to test our thesis with Apple to see how good of a company it is.
Okay, so here's the 10-year chart right here. So this is the 200 period moving average, and here it's never touched the 200 period moving average at all.
So
And this is on a monthly basis.
yes, and I keep saying 200 day, but we're on a monthly, right? So it's probably a 200 monthly exponential. But the same thing, but you can just see Apple consistently stays above the red line.
Exactly.
And so that's our growth thesis. Those are the type of companies we want to invest in. Apple is a fantastic stock. Now let's look at a 1-year daily and see how Apple is performing to a daily chart.
Again, it's above the 200-day moving average. So this is a 1-year daily, as you can see right here. It's a 1-year period, and we're still looking at Apple, and it's above the 200-day moving average
consistently. And when it gets close, it's a great buying opportunity. Now, Patrick, let's look at another metric here on Apple, okay?
Yes.
Let's look at the MorningStar rating on Apple and what does MorningStar has to say about Apple.
Okay, so let's take a look. I'm going to share the screen here.
And then we recently showed you how to get this $30 a month service for free. So you can go look at that video. I think I'm going to put that video on my Patreon.
Yeah, just go through your public library, and then that will get you to...
just go check out the video, and then we show it very explicitly. Right, Patrick?
Exactly.
All right, Patrick. So let's go look at the $30 premium MorningStar rating information on Apple. And if you could, all right. So what do we see here? What is the MorningStar rating? It's a 2-star, Patrick. A little surprising.
Yeah, that is kind of surprising, given the abundance of great news and great fundamentals about the company. But keep in mind, Morningstar tends to be very conservative.
All right, so let's get down to the nitty gritty, and let's go to some of the nitty gritty charts. You want to look at the key ratios real quick, or what do you want to go to real quick?
Yeah, well, what we can do first of all is, let's go to the key ratios right quick. So let's go down to here.
Go back. Right here, this key statistics. Let's look at the profitability. We want companies with a ROA, return on asset, and return on equity to be at least 15%.
Yes. Here, the return on equity is 147%. Wow. Return on assets, 28.06%. Return on invested capital, that's your stock capital, and your debt capital, is 51.7%.
All right.
And that's that's how efficiently the company uses its invested capital.
All right, now let's go look at the other key ratio, the PE ratio. We have to look at valuation.
Exactly. So right here, we'll go to the current. And right here, the trailing price to earnings is a little over 28%. 28 times.
But the one we really care about is the forward PE. So let's look at the forward price to earnings to see how expensively Apple is. And we want that number to be below 30 in this environment.
Yes, and here it is, below 30, both the trailing and the forward PEs.
I'm more concerned about the forward. But even that, 20 would be better. 25 or less would be better, to be honest. 25 or less, but at least 30 and below. So it passes that test, but then our next test is not only looking at the PE ratio, but looking at the PEG ratio. So what are we looking at here on the PEG ratio?
Okay, so PEG ratio, first of all, so that's the price of earnings over growth, how much you're paying for growth. Here, that is 3.31 times. So we, in this interest rate environment, we typically like to see the PEG ratio below 2.
Below 2, for sure. So that means even though the price to earnings forward is below 30, it's expensive. Because the PEG ratio tells you if your PE ratio is expensive or not, even if it looks cheap. The PEG ratio is the litmus test to say it's really cheap. And in this case, Apple is a little expensive. A PEG ratio of 3, I really want to see the PEG ratio at around 1, certainly not above 2. So Apple is priced a little expensively, even though it looks a little cheap. But is Apple worth that premium, Patrick? Does Apple deserve to have a more expensive price based on what we talked about? And what are your thoughts there?
I think it does. I mean, first of all, it didn't really decline much from its all-time high of $182 a share. I think it went down to maybe as low as 155, and right now it's around 170. So, as compared to many of the other stocks during this decline, they're off, 20, 30, even 50, 60%. So, this earnings report plus many of the other metrics definitely allow a higher PEG ratio than one may want, perhaps.
Yeah, and it's customary to have a higher PEG ratio if you're growing and you have that future growth perspective. So, I mean, that's normal. So if the market feels like Apple is that stock, then they justify a higher PEG ratio. I still don't like that 3 PEG ratio. But let's look at one final thing, Patrick. Let's go and let's look at the growth per Yahoo, because the other thing that we show our audience is go to Yahoo Finance, go to statistics, and look at the projected growth rate for any stock that you're interested in. So let's see if we can do that, Patrick, quickly. Let's pop up Yahoo Finance on the screen. We go to analysis, which is near the right. We go to the bottom of the page. We do this over and over in our fundamental thesis. And so what are we looking at here? Current quarter projection for Apple, if you can circle that, is minus 5%.
Exactly.
So that's not good, but it's understandable because Apple just went through the Christmas season. That's the biggest season of the year for Apple. So sales should, come down a bit. Seasonality wise, Tim Cook talks about that on the earnings call. If you were to look at the earnings call, Tim talks about that. But okay, so that's baked in. Look at the next quarter, Patrick. The next quarter after this quarter, a minus.
Yes, 9% or so.
Right. And then look at for the whole year, the current year for 2022, what Apple is projected to grow.
Yes, so we're talking about $2.50.
Do you think Apple is...
I'm sorry, 2.5%.
2.5%. Do you really think Apple is only going to grow 2.5% this year?
No. No, these are very, very conservative numbers.
Right. So the analysts, because Apple is almost a $3 trillion company in market cap, they're so huge. Most companies, as they get really big, cannot continue to grow. And
Yes.
so the analysts are very pessimistic about the growth of a $3 trillion company. Some of the stuff that we talked about a little bit ago at the beginning of the show, we believe that Apple can become a $6 trillion company, right? So
Yes.
I think those estimates are low. Let's look at the 5 year here. So that was a low estimate. Look at the 5 year from 5 years ago in the past. So over the last 5 years, Apple has only grown what?
The last 5
8%.
years. Yes. So the projected is 14.36%.
Right. So big projections. So Apple is projected to do even double of what it's done in the past and past 5 years. And that is pretty amazing in comparison to, if you look at the last 5 year Apple performance and how the company has grown, it's projected to double that in this next 5 years. So I think that's pretty exciting, Patrick.
Yeah, me too. I'm liking these numbers as well. Liking that the projected numbers, that is.
So yeah, Patrick, I mean, I think that's our bull case for Apple. I think it's a stock you want to own, not trade. And so what are your final thoughts on that?
Yes, I mean, if you definitely don't own Apple and you have excess cash, you definitely want to put that in and put it in Apple, because Apple is definitely a safe investment. It's as safe as safe can be, especially with the large cash position that it has on its balance sheet.
It definitely certainly seemed that way, for
Yes.
sure. Well, okay, Patrick, we'll wrap it up. This has been another episode of the Bet Out of Debt Show. We call it the Bet Out of Debt Show because when you place a trade, it's called placing a bet, which is a metaphor for investing. And hopefully it's a winner one that will keep you out of debt. And as always, we want you to keep investing. We want you to listen to the earnings call. Take the opportunity to. And we'll see you next Sunday. Same time, same channel. Goodbye.